Well, I want to welcome everybody to the Tuesday, August 20th mentorship webinar. And we've got some new people with us today. There's a lot of people that have signed up that I don't think have registered for the webinar. So let me just take a second and bring over Breath Hour Options Mentoring. And if you go onto the site and you go into the members area, on the right hand side, if you scroll all the way down, right down here where it says live mentoring recordings, if you click here, you're going to be able to see today's recording and any that are in the archive. But if you want to attend live, and we're going to make a change in our explanation, all you have to do is click this live mentoring registration. When you click the live mentoring registration, it takes you right over to the page where all you have to do is either, I want you to click for both Tuesday and Thursday. Tuesday and Thursday. And all you have to do is click here, and if you click there, it just takes you right over to the Wistia, not the Wistia, but the GoToMeeting registration. Put in your name, first name, last name, email address. That puts you right into the system, and you'll get an automatic email saying, hey, I think you get one the day before, and then you get one like 20 minutes before. So I'd like everybody to do that who's listening to this evening, and I hope to see you the next time we get together. Okay. Usually what I do on the webinars is, we start out with answering some questions and looking at, some stocks that you all have shared with me, and we'll just take a quick peek at those. If you ever have any questions and I don't answer them on the webinar, the best thing to do is just send me an email. My direct email is dbreathauer, BRETHAUER @comcast.net, and I will answer that question at the beginning of every webinar. Okay? Let's see. So we did have a question here. One of the new people was saying, and that's okay. Any question is fair game. It's always good for people that have been with me for a long time to review things. But the question was the go day on the Ready, Set, Go. And so I brought up Caterpillar, which was one of the stocks that somebody wanted me to take a peek at. If we take a look at that, we're looking at a reversal in Caterpillar. There was a ready day. This big bearish down day was a ready day. Okay, ready. Then today would be a set because it had a lower low. So that's a ready set. So you look at that and you say, well, what would be my go day? Well, let me blow this up a little bit. Here's like what I want to do. On the go day, I want to see continuation to the downside here, okay? And kind of as a rule of thumb, if you go from the bottom of the body to the bottom of the wick and split it, that would be a great place to look for continuation. That would be, and if it hits that point, that is a go day. Okay? Ready, set, go. Now let's take a look over here. That's a ready, set, and the go would have been right here around 84.63. Okay, it works both going up on a call and going down on a put or exit. Okay, and that's the way I look at the go day, halfway between the closing body and the top of the wick. Now, one other thing is, I use the same strategy to trade stock, and let me give you a good example here. This with Caterpillar, even though it's slightly trending down, Caterpillar was oversold sold at this point because it was almost down to the -2 on the regression channel. 95% of all prices will be contained within that regression channel. Every once in a while it goes outside there. That's an outlier. That's okay. If it goes outside there, you know that pretty soon you're going to be getting a reversal signal. Now, let's say you didn't have Caterpillar and you wanted to buy Caterpillar stock. Well, would you buy it up there? No. No. Would I wait 2-3 months? Absolutely. Sometimes you just have to wait for when the time is right. This time it is right, okay, because it is oversold. Would I get in now? No, the stochastics is still going down. The money flow is going down. Now the money flow starts going back up. Money's going back into the stock. Stochastics is going back up. Right about here is when I am buying Caterpillar stock. And I'm going to hold it. I'm going to hold it till it gets overbought. When it gets overbought, I've got two choices. I can either sell the stock outright or I can buy a protective put. Protective put is basically buying one put for every 100 shares. And that protects you. It's basically like putting your motorcycle in neutral, okay? Because as the stock goes down, the put goes up, and it's just like keeping it right here at neutral. The best thing I think to do is, because commissions are so cheap nowadays, is to go ahead and just sell the stock outright. And right here would have been a great place to get rid of Caterpillar. Buy down here, sell up here. Okay? Comes all the way down here. You look for the money flow to start coming back up. Stochastics come back up. You're going to buy right here. And at this point in time, you say, well, it went up and now it came down. You know, there's no problem in just holding on to it through a couple of these cycles. If you had bought Caterpillar down here, no problem in just holding on to that. It's not oversold or not overbought, so I just hold on to it. Okay, this also, we were looking at Caterpillar for a potential call, and you know, as it was moving up here, everything was looking good, but it stalled out really fast, and as a matter of fact, it's given a reversal. So I would say don't get into Caterpillar. And let it come back down here a little bit more, and we'll revisit Caterpillar. All right. Another one we're looking at is Baidu. Baidu, and we were looking for a put on Baidu. Okay. You can see that Baidu is over the +2 on the regression channel. This is what I call an outlier. So right now we're looking to establish and place a put. But we just got the stochastics crossing over here. Money flows starting to come down a smidge. And over here we do have already set, and this would have probably been an okay place to get in to with a Baidu put. And it is heading down there on the stochastics. So now this is a little bit expensive. It's a little bit expensive. If I go over here on the trade tab, probably want to go out to the November. Don't have too many in November. It's sitting at 135. Probably want to go with about a I don't know, maybe a 145, and you can see how expensive that is. The problem about Baidu that I never really liked too much is, although people talk about it a lot, there isn't a lot of open interest. Okay, so because there's not a lot of open interest, you might have trouble getting filled. Now, the difference between the bid and the ask is not that much, so that's not the problem. Two problems: one, the open interest is low, and two, the options are pretty expensive. But if this is, a stock that you like, I would, if it were me, course, you know that these are not recommendations. I can't give recommendations. If it were me, I think buying a put right now is the thing to do on Baidu. Okay, the next question I had was on Priceline, and they wanted to look at Priceline as a potential a Theta trade. Okay, on a Theta trade, what I do is I want to go up here to my chart that says Theta, and I like to have the Arun indicator up there, because the Arun indicator for a Theta trade tells me a lot. One, if I'm looking to put on an iron condor, I want to see both of these, which are the bullish and the bearish indicators, going down. If they're both going down, then I think this is a good time to put on an iron condor. An iron condor being we're going to sell a deep out of the money put and then buy one further out, and then we're going to sell a deep out of the money call and buy one further out. So let's just go through step by step on here. Michael, I see you got your hand up. I'm going to go ahead and unmute you before I go further. I don't want to lose you. Michael, do you have a quick question?
Yeah, Dale, after a Thursday session, I looked at Baidu. On Friday, I got into a bear call, which was, I think I did the 160, 150, and I got like 93 cents for the September. So it's a nice, I think it's a good play.
What kind of credit did you say you got on that, Mike?
I got 93 cents.
Okay, and that for the September?
For the September.
For one side.
And the 150, 160.
150, 160. Okay. Okay.
And the 150 was way above, the third.
Yes, way up here. So I think that's a good play at this time, Michael. Keep us posted, because I think that's good. Especially, I like the fact that the Arun indicator is now starting to come down here, and it is crossing over. This is kind of a critical spot here. And let me bring that back over. Where'd my chart go? Kind of a critical spot right here, because it's just crossed over, and a lot of times after a big run like this, it won't give up the ghost just yet, and it might make another little run. So keep an eye on it, Michael.
I will. Thank you.
You're welcome. Thank you. Excellent. Okay. Let's go back to Priceline here real quick, because Priceline, I think, makes a lot of sense to put on an iron condor. So let's just walk through the steps here. If you think the chart's looking good, the thing to do is go up here to the trade tab. We'll see that it's a little bit shy, so we're not going to get a lot of credit here. But putting one on at 30 days is okay. I'd rather put it on around 40 to 50 days. So this is a little bit on the shy side. But if you want to, you're going to accept maybe a little bit less credit here, and you're probably not going to hold on to it for very long. But the first thing we want to do is come down here and look at a delta of 0.110, and I would probably go with the 860. Let me write all these down. So we would sell the 860 and buy the 850 put. And then on the call side, let's see, probably gonna sell the 1020, buy the 1030. Let's see what kind of credit that gives us. all you have to do now is click on any one of those numbers. You're going to right click. You're going to sell an iron condor. Remember to set up the proper amount, what you want for each one contract for an iron condor. It's going to require $1,000 margin because we're 10 points apart on our spreads. So let's set this up. On the call side, we're going to sell the 1020 and buy the 1030. Okay, and that's the call side. On the put side, we're going to sell an 860 and we're going to buy the 850. Okay, so that gives us about $1.50 credit, which is not bad with 30 days to go. You can't expect, I usually like to see over $1.50 credit, but that's with 40 days left, so some of this has already gone out. So I'm okay with that. Now, if you want to, you could tighten this up a little bit and get a little bit more credit, but I really like the delta of 0.10, and with only 30 days left, I'm pretty conservative when I put on these Theta trades because they're very lucrative. But you can get hurt if you get too greedy. So I'm okay with the 147 here. Now I always click on that red or on the blue dot and put that over into the Analyze tab. Okay, so now you have your risk profile over here, and you can always come over here and take a look at what the credit is. Okay, now if you want to actually put in the trade, then all you have to do is come back over here and reset this up. Sell iron condor, and this is always good practice to do this. We want to set up the number of contracts. We want to sell the 1020 and we're going to buy the 1030 call. Okay, on the put side, we're going to sell the 860 and buy the 850. Okay, and it's at 145. Never go to the natural, always go to the midpoint on these. And if you like that, you can confirm. Make sure you read what you've got here. Is that what you're looking for? Yep, that's what you're looking for. Okay, max profit, $1,400. Send. All right. Okay, and it was filled that quickly. Because Priceline's got, they've got a lot of people are following Priceline, and you can get fills. It seems like you can get fills a little bit easier sometimes than you can on the RUT. Although I love the RUT. So we've got that Theta trade on Priceline. So I want to thank the person that brought that to my attention. And that's good. That's what the community is all about. If you guys see something that you like, you bring it into the community, and we can all benefit from it. And that's wonderful. Okay. Usually we talk a little bit about the market. The market's strong today after being pretty weak. Is this a change? I kind of doubt it. Is it a pause? Yeah, it's a pause. So I think we definitely still are in a downtrend in the market. I think today is a pause. Okay, let's go over some of our Theta trades. Let's start with the RUT. The RUT yesterday, you can see, let me blow this up a little bit. You can see that yesterday we came down below the 161 on the Fibonacci's. Okay, and the market was weak. The market was weak, but when we set these up, you always look at what are the fibs and where is the support and resistance. And you plan ahead as far as when you think you need to get out. Well, I had already looked at this and I said, here's the 261 down here on the RUT, and that is right around down at 1,000. At 1,000. At 1,000, that's very interesting because that's right at my uncle point. So I'm okay just letting the theta trade work. Let the market go. Yesterday we were down a lot, and today we're up a lot. These theta trades, if you follow them on a day-to-day basis and freak out by their big swings, they will eat you alive. So you need to just not worry about it. You don't count your money while you're sitting at the table. And as long as, you make sure you've got your risk profile up here, and you make sure that you've got your uncle points put in here. These are the break-even hash points. As long as you stay in this zone, let it go. Let it go. What am I watching for? When it gets to be about 10% profit, I look at getting out unless it's right in the sweet spot. Here's what I call the sweet spot. Right in the apex of the curve here. This white line's the P&L. And when it gets up around $1,000, that means we've made 10%, and now I'm interested in exiting unless it's right in the middle of the sweet spot. Okay? If it gets over here to the 6%, if I can't build a case for support and resistance and the Fibonacci's, I'll exit. Okay, so you remember the 10% and the 6%, and we were down about $300 on the RUT yesterday. We're up $400 today, and that's the way this thing trades. And you can't freak out because you got to let it go. You got to let these theta trades pretty much go, and as long as they're between here, you just let it go. And I don't even look at it. I don't worry about how much money that is because I know it's going to change tomorrow. So, okay, so that's our RUT. Now, I want to make a point on the RUT. If you want to see what you've got, you can always go to this P&L on your monitor tab, and all you have to do is line that up and left click, and that's the exact iron condor that we have when we put it on. We actually legged into this when we bought the put side first and then put on the call side. What I think is interesting at this point in time is at this point in time the bear call or the vertical spread on the call side is only worth 20 cents. Okay? At this point in time, if you want to go ahead and sell that vertical and take that profit, you put it in the bank. Okay? If you exit it, that transaction is complete. And that might make a lot of sense. Now, yesterday it made more sense because it was down to 10 cents after yesterday's big move down. Okay? And you can always come back in. Yeah, there's 31 days left and put on another one a little bit tighter. Or you can say, hey, I did that for this month and I'm fine, and I'm going to stand on the sidelines. Because we never let this go all the way to expiration. When we first set up the RUT, it was worth $1.70. Okay, and if I can get about 80% of that, 80% of $1.70 would be $1.35. I'm really happy because that's $1,350 per 10 contracts. That's more than I want. I'm looking for 10%. That'd be 13%. So if now follow my math here. If I set this thing up for $1.70 credit, and I'm looking to get out when it's $1.35, when I've made $1.35, okay, then the difference between $1.70 and $1.35 is 35 cents. And on one side of that, that'd be 17.5 cents. This guy's at 20 cents right now. Whenever it gets to this point, you seriously should consider going ahead and taking your profit. Okay. Now we'll leave this on for a while, and we'll just watch this for a while. But the our RUT Theta trade is doing very good. Our Google Theta trade is doing very nicely. Google is down around here, and with the market being up today, it's back into the positive territory. Do we worry about Google at this point? No. You just adjust these, because these will change every day, because as Theta, as the premiums erode, these break-even points get wider and wider. This risk profile, it's all you need to do. Once you set up the trade, all you have to do is don't even look at the chart, don't even look at how much money you've made. Just look to see where you're at on the risk profile, and as long as you're between these points, you just let that Theta trade go. Alrighty? Okay, let me share something with everybody. Fred, let me get to you real quick here. Fred, question?
Yeah, thank you. Yes, sir. Go back to the RUT on your analyze and risk profile. I want to ask, it looks to me like go to your sweet spot.
I would say this is the sweet spot right here, Fred.
Now, you were talking about, you were talking throwing in 10%, and that shows $505
right.
profit. My question is that the profit as of now, and it may increase or decrease, or is that your maximum profit available even if you hold it to the end?
No. What that, and that's a good question, Fred, because you really need to understand the ramifications of what this chart is showing you. This is where we are right now, Fred.
Yeah, I understand that.
Okay. And so the value of the iron condor we have is $323.72.
Right.
Okay. Now, but what's cool about this you can project out, and you can say, well, what happens if the RUT goes up another 12 points?
Mm-hmm.
You would be right here. Okay.
Right.
And that's a more lucrative spot than where we are now, because you're going up this curve. In other words, you're closer to the sweet spot here than where we are today. So if the market goes up, that's good.
But if isn't it 50% rather? I mean, isn't it 50% rather than 10%? I mean, isn't it 5% rather than 10%?
If we were right here, yes, but we're right here.
Okay.
Yeah.
I guess I'm trying to figure out, how do we ever get to the maximum 10% profit?
Oh, well, what'll happen is, and I can manipulate the market right down here on this calendar, Fred. Watch this white line. Assuming we're right here, and the market doesn't move for, let's call it 5 or 10 days.
Yeah.
What's going to happen is this white line will keep going up and up and up and up. And you'll get that 300 will get to be 1,000.
I see.
Okay, let's actually do that. You ready? Okay, what's today? Today's the 20th, so we've gone out 10 days. And if it stays right here, 10 days from now, that'll be worth $900.
Right. Okay.
Okay?
I see. Thank you.
You're welcome. You're welcome. Now let me go back and change this so I don't want to, let's take it back to here. Okay, cool. Good. Good question, Fred. Thank you. Alrighty. Let me just do one thing here. I want to, I've presented this a while ago, and I want to just review this for everybody on the theta trades. Theta trades are probably my most favorite. Yeah, most of my portfolio is in stock, but my theta trades, I kind of look at theta trades as a monthly income. Okay? This was, and what can you expect? What can you expect? This was an independent back testing for 10 years of the RUT when it got to be when it got to be minus 6%, this person would exit the next day, and when it got to be plus 10%, they would exit the next day. So the max they could make was 10%, and the max they could lose was 6%. Okay, and he did this religiously for 10 years from 2003 to 2012. Now, I think what's interesting is that of the 10 years, 9 of them were very profitable. 1 year was slightly down. Okay. If we look at the P&L average per month, okay, here's what you're averaging per month. Not the 10% and not the minus 6%, but you put those together, and this is about a 79, 70. Well, let me divide. 75%. 75% over 10 years. Just going by the, getting out at plus 10%, getting out at minus 6%. What you would do is if you would just religiously do that and not be emotional about it, just follow the rules, you would have made, on average, 3.5% per month, month after month after month. Would you have losing months? Yes. Would you have a losing year? Yes. Would it be a lot? No. This is about break even. But good grief, can you go into your local bank and get a CD for 3.5% per month? Okay, now let's think about that. Let's say we're doing this for monthly income, and we've got well, just for rough numbers, let's say we've got $1 million portfolio, and so I'm going to put about 200,000 into theta trades. So month after month, I'm going to have $7,000 go into my bank account just by following the rules. Get in around 40 days, set up an iron condor, get out if you're losing 6%, get out if you made 10%, and wait and set up another one month after month after month. Okay? That's generating income. It's pretty doggone awesome. Pretty doggone awesome. But don't, when you get greedy, that's when you get into trouble. Okay? That's when you get into trouble. You don't want to get greedy. You want to, the market, people make a lot of money in the stock market. A lot of money. Not overnight and not without a large amount of capital to start with. Okay? Don't expect miracles from the market. This is for real, and that's an amazing percent return. Now you have to adjust your capital and investment amount accordingly. Okay? Okay? I hope everybody follows that. Let me stop right here before I go into some of the weekly options and see if we got any questions. And oh, by the way, for the new people, all you have to do is raise your little hand down there, and I will stop and answer your question at that point in time. Jim, I see you've got your hand up. Let me get to you first. Jim, how you doing today?
Great, Dale. Sorry I missed you earlier.
I can't hear you real good, Jim.
Okay, how about now?
There you go. Perfect.
All right. It appears that you had that Theta information in a PDF file, the one you just displayed.
Yes.
Possibly you could send that out to us all. I know you've done it before, but if you could do it again.
Yeah, what I'm going to try to do, Jim, and give me a little time with this. What I'm going to try to do is post these on the website.
Oh, okay.
So that then I'll have a whole series of postings that you can go and look at it any time.
All right. Will we be able to copy it off the website?
I'm going to have to check with my IT person. but yes, that's what I'm going to try to do, Jim.
Okay.
Give me a little bit of time.
All right.
Thanks. All right, good. John, I see you've got your hand up. Let me get to you here. John, another question? Or did you not put your hand down?
Yeah, no, I've got my hand up.
Okay, cool.
I need a little bit of advice. I have a bull put spread at the present time on Priceline. Would it be useful to put the bear call spread on it and make an iron condor out of it at this juncture?
Where do you have the bull put at, John?
I have it at the put is I sold the 865 and bought the 860.
865. And is this on a weekly or is this for next month?
This is for September.
Okay. All right. Does it make sense now to get a bear call on here?
Yes.
Yeah, I think it does, John. Let's see. When we set one up here,
it was very close.
Yeah, that's very close to what you've got here.
Right.
I think that does make a lot of sense to do that, John.
Well,
you double your credit.
Yeah, I'm very well. Okay.
Now, you remember that's not. Let's see. You know the old thing. That's what I would do.
Yeah. Yeah. You're not telling me to do it. I'm going to make up my mind about that.
There you go. Right. Very nice. Thanks, John.
You're welcome.
All right. Cool. Yeah, that's good. That's legging into one of these theta trades is a good thing to do. I think that makes a lot of sense to do that. Okay, let's see. I don't see any other hands up. So let me go ahead into our weeklies. Let me set my screen here to the weeklies, and we'll start out with EEM. All right, EEM came down to the 127, and it's bouncing up a little bit today. And this is interesting because you know, a lot of things. The market's been very weak, and is today a little bounce up? I don't know. But you know, this is what the put side was making a lot of money, and the call side was not. Well, now today you're giving some of that back a little bit, but the 127. Yeah, this was a pretty dominant measured move. This was a 2-day measured move on EEM, and yes, indeed, we used this one little squeeze. I saw the squeeze happen here, and then when it got confirmed here, I went ahead and got this, you know, probably could have. You know, I got it over here. I might have could have waited over here and just got the put and got out here at 127. 127, I like to see it drop further than that. And you can see it's starting to come back here a little bit. So at this point in time, I'm going to let the EEM just work a little bit. Okay. And FAS. Okay, FAS had a big bounce today. And, you know, will it come back down here again? I don't know. But this one came down to the 161.8 and the 78.6 of the big measured move. And overnight it came up and then opened down here and then made a measured move to the upside right here around 10 o'clock. Right around 10 o'clock. Well, what do you think we should do? Out. We're out. Okay. And yeah, we gave some of it back, but you know, it came to the 161.8. Give it a chance to go further down. It didn't. It came down here and bounced back up. Out. Okay. And now we have the call side. On GDX is up a good amount today. And it actually had been dropping down, and it almost did the same thing. It didn't come down here, and then it made a major move to the upside. I'm still in both sides of gold because in my mind that didn't make a big drop yet. And the other thing I tried this week, I went with I went 2 weeks out. So when I put this on, I had 13 days left. It was a little bit more expensive, but the reason I did that is when I went to the weekly option for this week, it was so cheap. I thought, well, why not go with the 2-week option? And it was still only $1. Okay, plenty of time for a pop. So I wasn't too concerned about getting out here. I'm looking for a pop in gold, or a pop in the gold mining ETF, or, you know, $1 is not a pop. I'm looking for a pop. This is a pop. That's a pop. Okay. And I've got this one for 2 weeks to see if I can get that pop. That would be a pop. There's a 2-day pop. There's a 3-day pop. Okay, that's what I'm looking for now. There's a pop down. So this is not a pop. This is a chop. And I don't want that. I'm waiting for a pop. Bam! You know, and that's when I'm looking to get out of gold. So in the meantime, I'm just holding on to that one. And then on TLT, same thing happened as EEM. It came down to the 127. Now it went back up, but now it's coming back down. So I'm holding these. I'm holding both sides of those. Okay. So that's where we are on the weeklies. Any questions on the weeklies? Any questions on the weeklies? These are the 4 stocks that I follow. Emerging markets, the triple bullish indicator on the FAS, GDX and TLT. This is a gold mining ETF, and of course this is the Treasury bonds. Alrighty. All right, no questions on there. Good. So let me go ahead into some of our directional trades, and for that I put in a different screen. I've got a screen for Theta, I've got a screen for the weeklies, and I've got a screen for the regular directional trades. And I think it was. Let's see. It was I did a special webinar, and you can find it under the recorded webinars. I did a special webinar on setting up the charts. So if any time, see if I still have that. Let me see if I still have this. Okay, this is where you'll find the recording. So all I have to do is just scroll back here. Let's see, August 8th. No, it was back further. August 1. Now, you say, oh man, I can only go back to July 30th. No, you can go all the way back. Okay, in the archives, all you have to do is hit these older entries. I'll have to find the date for you for that one. And I'll find it for you right now. Okay, let's go down here. I think I did it. I think I did it earlier. Let's take a peek here. There we go. Chart special, chart setup. It was between July 23rd and July 25th. I actually think I did this on the after I. Well, yeah, okay. I did it on July 23rd. So there will be 2 webinars that you'll see on July 23rd, and one of them was a special webinar that I did showing you how to set up the charts for the Theta trades, for the weeklies, and for the directional trades. Okay, so here are the directionals, and the first one we want to take a look at is Qualcomm. Qualcomm, I thought maybe we were going to get stopped out. We have a pretty tight trailing stop on here, right below this point here. never got down there yesterday, and back up again. It goes today. So now you say, well, okay, I was here. Should I move it up? Sure, sure. You know, every time you move it up, you're basically saying, this is, I'm willing to accept that point, and we continue to make money on Qualcomm as we go up with these stops. So let's say we change the stop to 66.24. All you have to do is come over here, and here is the Qualcomm trailing stop. You just hit cancel and replace. Come down here, hit the gear, and change this to 66.24. Say OK, confirm, send, and now you've got a new trailing stop on Qualcomm. It's that easy, and that's a really cool method to just kind of lock in. We've got 70, close to 75% profit in Qualcomm right now, and we don't want to let it go. Okay. DD, I see DD is up just a smidge today. We've got a put on DD. I'm still in, I think we're still in good shape on DD. You can see this is, we were up at the +1 here. The stochastic started to come down. The money flow started to go down. So we're okay here. And then we had a ready, set, go here. The 15-day and the 5-day crossed over. The stochastics are going down. This day right here does not change my mind as far as having a good option that's a put. All right. So we've got a put in DuPont. We've got a put on Coca-Cola. Now, this is interesting on Coca-Cola. We have a put on here, and it's actually made another measured move here. How much lower can this go? So you might start thinking about putting a trailing stop on Coca-Cola that would, follow this down a little bit. I'll have to think about that, but I'll let you all ponder that one here for a little bit. We have a call on silver, and we have a call on Stryker. And Stryker started dropping down a little bit, and I was thinking seriously about jumping out of there, but giving it a little bit of a chance, but if it turns back around and goes down, I'm gonna jump out of that. Let's see. Let's just take a quick peek at we exited Baxter. And now it starts going back up. Let's see. David, I see you have your hand up. Let me unmute you here for a second. David, how you doing today?
I'm doing great, Dale.
Excellent.
Had a question on our Coke and Verizon dailies. I sold both of those puts, and I'm profitable already on the Verizon, and
Okay.
I'm close to it on the Coke, even if the calls don't come in. But now if Coke turns around and goes up, I'm in great shape.
Yeah, and that's the way to play it, David, because I did the same thing on Coca-Cola. I got out right about down here is the day I got out of that put side, and if I remember correctly, I've got we've got about 25 days for the call to do something.
Right.
Yep. Excellent.
Those are really great trades because they give you a lot of time. They're good training trades, but they also look like they have a good chance to be profitable.
The one thing that some of the feedback I've got on them, David, and I agree with you, is that a most of these go negative before they go positive, and you gotta be willing to ride it out, because you're basically you're putting on a position that's going, the longer you're in that position, the worse off it gets. So yeah.
Right.
That's the only downfall, I think, David. And I am going to talk about your vision board here in just a second.
Okay.
Okay. All right. We got one of our newcomers. I just unmute you. It's Ellan, and you pronounce that?
Ellen.
Ellen. Okay. Ellen, how you doing? Welcome.
Thank you, Dave. Good afternoon.
Excellent.
I have a question that may just be an elementary question, but on silver, we had such a big jump on that, and it looked to me like when I attempted to draw Fibonacci's that maybe it was up quite a bit. I just wonder why you wouldn't take your profits now on that and wait for it to drop to go back in. Is it because it's still between the one standard deviations, or what?
Yes, and that is an excellent question. Let me go ahead and mute you, and I'll come back. Sure, you bet. Let's do that. Let's put on a fib. We've got a couple places we can put on a fib there. Let's go from this low. Let's try this first fib. Okay, and it did. Elaine, that's excellent. I mean, it did push to the 261. Let's try the next level. Let's go from there to there and down. Okay, interesting. All right. Then let's try this fib, see if we get some clustering here. Woo-wee! Wonderful. It looks like you've got this pegged right here at the 261. That's an excellent observation. So, I like that. I like that a lot. That's get rid of all these to clear that up a little bit. That makes a lot of sense to go ahead and jump out of there. I don't think we got in late on this one. We were we were in silver way back here, and then not much was going on, and then we got out, and then it popped, and then we got back in. I don't think we hardly made anything at all. Well, we made a little bit. We got in at, this is the second time we've been in there. We got in at 350, and now it's at 457. 457 minus 350. Okay, divided by 350. Sets up, we're up 30%. Let me unmute you again. Elaine, when did you get in, or did you get into this one?
Well, I'm trying to see that right now. It looks to me like, let's see, I'm up, let's see, I think I got in at, it was around 250 or so.
Okay.
I'm up, well, I'm not up that much, I guess, but I'm up $215.
Okay. Okay. So you got in right about when we did, and I think that's an excellent observation, and I think exiting with 30% is okay. And that
I had set a conditional exit if it dropped below. I'm trying to see. I can't get it to
maybe up.
come up now.
Maybe
but
up.
I thought I'd leave it up for a while, and then, if it starts to fall, exit.
Yeah, I think that's excellent. What I'm going to have to remember on your name is I'm used to seeing an I in there and an E on the end.
No, it's Ellen.
Ellen. Okay.
Ellen Renee.
So I did have it wrong. Ellen. All right. Cool. Sorry, Ellen. Thank you very much.
No
That
problem.
was a great observation, and I think that's a great, great idea to exit that. Wonderful. Okay. Alrighty. With no further questions, we always want to end our little session here with a meditation. And today's meditation, these meditations I get from the book by Melody Beatty, and I modify them for us, the traders. But taking just the stock in you as a trader and keeping your emotions out of it and your ego goes a long ways. And we've been talking about setting up your affirmations, and we're on number 10 here of the 15 series, and we'll recycle these. But today we're going to talk about let your vision guide you. Visions are different from dreams. A vision is a picture that comes from the soul and comes out through the heart. A vision of your affirmation could be you as a successful trader. What would that look like? Do you like the results? What would feel right? What do you see yourself doing? Be clear and concise, then let it go. Learn to see visions in your heart. Learn to trust them. Okay? A vision is a small glimpse of light that shines and shows us our path. It is a quick flash of something that hasn't happened yet. It may tell us something about today or 10 years from now. Visions occur when our soul looks at the map of our lives, gets a sense of where we're going, and tells our heart how to find that place. How cool is that? The more conscious and clear and direct we are, the more we can tune into and help create the highest vision for our lives. David Crowner just sent me an article, and that article was there's a real good book out there called Secret. The Secret. They made a movie out of it, and basically the secret to success is a clear vision. Who are you? Where do you want to go? What do you want to do? Now, you got to be realistic with this. I mean, your vision shouldn't be a pile of money. So what? What do you want to do? How much do you want to give back? What, you got to have spirituality. You have to have your physical body in shape. You have to have your mind. I mean, all this should be part of your vision. And the article that David sent me was about this guy that built a vision wall. In the book The Secret, they talk about a vision board, and you cut out pictures of who you want to become, and you put them on this board. Well, he took it one step further, and he made a whole wall of his house, his vision, and it was just loaded. I mean, he couldn't avoid it. He just saw it all the time. Well, that's reinforcing the gray matter with positive thoughts. Negative thoughts creep in so easily. You want to keep bombarding the gray matter with positive thoughts. Positive thoughts about your trading. Positive thoughts about what will happen when you're a successful trader. Okay? Don't let greed get into this. Make it realistic. What do you really want to do? How do you want to do it? That's going to become your vision. Okay? Then that should tie back into your affirmation, and now you're putting it all together. And that's the webinar for today. We'll get back on Thursday and we'll continue the fun. Bye-bye now, everyone.